Good morning, traders. It's 9:02 a.m. Eastern Time on Tuesday, the 3rd of October, 2017. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market disposition this morning, again, DAX leading the pack up strong, 101.5 points. DAX is trading around 12,900, up 0.79%, followed by the mini Russell up 0.21, and the rest follow. Most U.S. indices are between 0.2 and 0.07%. The laggard again today, as we saw yesterday, pretty much mirror image of yesterday, is RBOB gasoline, followed by crude oil. Crude oil, as I talked about on Friday, I showed crude briefly on Friday, and I talked about the very strong potential that, or the very likelihood that it'll come down to the 50-30 to 50-45 area. It's trading at 50-33. It has dropped yesterday, finally, and it's back in balance in the close to this composite point of control. So crude's trading at 50.34, down 0.47%. DAX is closed. I see volume today. Yeah, that's odd. Yeah, okay, I see it. Okay, that's yesterday. Okay, thanks for correcting me there. So with that, looking at overnight news, there's nothing there. Looking at today, we already had Fed Speaker Powell speaking at 8:30 Eastern. Nothing else on deck for today. There were some European numbers, construction PMI and so on. That's what was on the calendar. Today is free and clear. As far as what we expected yesterday, here it is. We're looking for the market to open sideways, make a quick test, a brief test down, but most action is expected to be to the upside. The upside action was expected to take us to at least 25.22 with a consolidation in that area. I was looking for about 7 to 9 points in range. This is basically what happened yesterday. The market ended up higher, ended up in the 25 plus area. It didn't dip as far as we'd like to see, but mostly the primary move, the primary trade idea was the long on a pullback, and the market managed to give us a pretty decent pullback. I commented in the morning that the push early was weak, and it did give us a nice rotation down that created an opportunity for a long. The secondary hypothesis was for the market to push higher early, put in a failed retest of the high, and then we have an impulse down and we start to move towards the low volume node. Interestingly, the Nasdaq did just that. The Nasdaq played out hypo 2 quite well. It pushed right into that lower volume node. Here's the Nasdaq. This is on a 6-tick Renko, and you can see here the Nasdaq pushing higher early and then pushing right into that low volume node, overshooting it. The low volume node's around 59.63. It got to 58, and then it bounced and went sideways with a point of control that's in line with the prior day. We didn't see that move in the ES. A lot of dissonance between the indices, which had me looking at the spread ratios. This is a really great chart built into. This is an RTX indicator within IRT, and what this does is it creates a correlation. It gives us a correlation chart between the various products. The symbols are pretty self-explanatory. TY is the 10-year note, or the ZN. US is the US bond, ZB. BD is the Bund, EX is the Euro stocks, and XG is the DAX futures. And you can see here the correlations between the products are not so great. The Nasdaq having some pretty poor correlations with pretty much everything. I saw that yesterday. The only white column on the spread chart meaning there's little to no correlation at all. You can see here the RTY, which is the CME. The CME Russell versus the ICE Russell are correlated 100% as we would expect. The Russell is correlated 86.8% against the ES. And then it's negatively correlated even better to the notes, and even more so to the bonds, believe it or not. But overall, if you look at the Nasdaq, it's way out there. It's doing its own thing. In this chart, you can switch to contract ratio spreads. If you were to put on a trade in these products, these are the ratios that give you the best, the contract ratios that give you the best correlation or the best hedge if you're trading spreads. And then this is just the direct ratio. Okay. Anyway, little crash course there in spreads, but I just wanted to make the point that the secondary hypothesis, which played out completely in the Nasdaq, was completely refuted by the ES. Generally, we have some correlation between the products, but right now the Nasdaq's running on its own. With that, I'll go into the overnight session. So we see the push up into 25.25. We see it pushing and consolidating against the measured move 25.2250 right here. A lot of consolidation. You see some size or some volume that occurred in this area here. Let me adjust this chart. And then the market pulls all the way back to the opening swing high on the dot. It went right to 25.19, which was the opening swing high. Here's the opening swing, just so you could see it. There's the opening swing, 25.19 down to 25.17.5. Very, very tight opening swing. Just a point and a half. We just don't see that often. And then it pushed up to 25.75, pulled back to the mid plus 2 ticks, could not put in a higher low. So this looked like hypo 2 to me. We break the mid, and then we're looking for it to sell off, and then this cancels hypo 2 right here as we cross above the mid. Kind of a confusing trade, but overall saw strength in the underlying market, the underlying sectors, but there was some weakness early on. The strength came in later, and you could see here in the index chart, you could see that most products were, most assets that were follow the index or lead the index or correlated with the index were positive. The weakness came from the transports. You can see the transports here were trending down early on and kept making lower lows until that pullback to 25.18, and then the transports started to turn and push higher. And that creates, not that I trade off of the transports, but it creates a better opportunity to read the market and its underlying. You see that the dashed indices like this one, it's got little dashes. The dashed one up here, that's the financials. Here's the biotechs and the industrials, or that's healthcare, industrials. All of these were fairly strong. Consumer discretionary remained near zero. It just teetered on zero, the black line here. But the rest of them were relatively strong, with transports being the laggard mostly. And then techs were the drag. Techs down here just stayed negative for the day, finished at negative 0.14 from the open. That's a lot to take in, I know. So let's take a look at our overnight trading, and I must have that chart open. Overnight, here we go. Overnight trading. So the overnight session looks pretty much like yesterday. Here's yesterday's overnight session. Push up, pull back, consolidate, 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 consolidate. Okay. After yesterday, we did see evidence that we're likely to push to squeeze lower. We did not squeeze lower. We pushed higher on the open. I cannot explain or try to explain the auction as it's occurring now. The method I've decided to switch to and create and I have been sharing since 2010 or 2009 that I developed in 2004, 2005, did not have this. It doesn't respond well in a market that's making all-time highs. This is a market that is um, very favorable to the OTF, the other time frame or the higher time frame investor. You just put your money in, right? You invest your money and then you just sit and watch your portfolio grow, it seems, and very little adjustment. There's very little need for an investor right now to pull money out. So you just put it in Betterment or Wealthfront or something like that, and it just sits there, with ETFs, and that's a very challenging market in my opinion. And while we're pushing new all-time highs, we're not. The auction tends to not operate uh, properly because we're not basing the action or the rotations on value, the perception of value, right? The way we determine value is we want to see the market trade an area, trade away, come back, and see how it responds to that area. Does it fall through? Does it hold and go higher? Does it build value higher? And so on and so forth. And um, new all-time highs tend to just give us an area that's never been explored before. And so we don't get the kind of information that makes it a powerful way to organize market data and to trade. So my trading is very tentative. I'm not gung ho. I'm not trading full size. I'm not gung ho about my positions. I am really interested in a flush, a little bit of a spring cleaning, just to tell us the quality of the buyers that are in here that have been buying us up. What is the quality of those buyers? How weak or strong are they? We're just not seeing the other side. It's kind of like going going to a restaurant and all of the food is bland, and you're having your taste testing all kinds of dishes, but they have no spices, no salt, no pepper. Uh, your tongue has no way to contrast the taste for you to select what dish you like best. It's all just very bland. The auction is kind of the same way. We're not testing the opposite side very well for us to see what kind of participation we have. When we test the opposite side, it gives us a very strong clue as to who the other side is, what the participation is, how serious are the buyers, how serious are the sellers. But with this, it dips, then it goes up. It's dipping on news, then it goes up, and it continues higher and higher and higher and higher, and then it dips a little bit. So we're never really testing those buyers on the sell side. They're very, very complacent, I would imagine, at this point. This is truly a bubble. Everybody knows it, and it's been here a while, and it's very, very well supported and unprecedented in many, many ways. In fact, 2017 had the lowest number of 1% days in a long, long time. I think it was like 7 to 10 days with 1% this year so far, when we would see 30 to 40 trading days at least with 1% moves. It's really, really tight. That's my point. Anyway, the overnight session had 105,000 contracts in it, very low, very, very low. And participation is just like we saw the day before, a very high kurtosis profile. Really, the overnight session is basically telling us that there was no discovery whatsoever. We pushed to 25, 29, 50 and have sat sideways. We pulled back to 25, 25, 50, and we've got 4 points of range for the entire overnight session. I understand the German markets are closed, but overall, there's just no action. I mean, the German markets weren't closed yesterday, and it basically had the same kind of movement once it set in, right? So we had the little spike in the morning or on the reopen, and then after that, it's been particularly dead. So there's not much to comment on here other than the fact that it is pretty tight. Here's the weekly. We're starting to form our next leg up on the weekly. We did not dip into last week's range, and we're continuing higher. Now, I'm out of time, so let's get to the hypotheses. Today, exact same thing, same market, same context, same pull in. So we're looking at an open auction out of range. We're looking for a potential weak test down. We're looking for a base and then an impulse into the next measured move area, 25, 32, 25. We have a double measured move area. You've got the dates here, but I'm looking for the impulse up, and then I'm looking for the sideways action, pull back, and then holding sideways. I'm looking for another P-shaped profile, and that's hypo 1. Nothing magical. Basically, I'm sounding like a scratched record from trader bite to trader bite. There's just nothing else out here to talk about. Secondary, you guessed it, open, push higher into the measured move, pull back into the opening swing, lower high, put in a lower high, and then start to explore to 25, 24. That's the better play, but you know, not it hasn't been very likely. So I'm looking forward to exhaust buyers, find sellers in the measured move area, and then rotate down into the point of control. Yesterday's point of control, potentially all the way down to 25, 21 and a half, and then hold steady in this area with a double distribution profile. I expect this profile to look like a distribution up top and a distribution down below. That's hypo 2, and that's how things are shaping up for today. Anyway, make sure you have your plans. Make sure you're patient. Don't try to preempt the market, and let it tell you what it wants before you jump in. My suggestion to a lot of you, to probably most of you, is to look to other products, start doing some homework on other products. And as I told you yesterday, on October 10th at 4:30 Eastern, I'm doing a webinar with Futures IO that talks about looking at other products, the criteria, and then doing a little bit of homework to come up with a raw edge that you can then build on. And for that, we're going to look at the RTY. That's on October 10th. Good luck, and I'll catch you tomorrow morning. Take care.